my first commercial deal. And I've been in fixed income for a while. I went into this deal. I bought a property for a little bit more north of 1.6 million. I did a 10-year note. It was a 25-year amortizer. So the payments were nice and stretched out. And the bank that I dealt with did not want to give fixed rates. So I did an interest rate swap, which is it's a pretty simple derivative. And what had happened then is I locked in a fixed rate of 3.88%. And what had kind of happened from there is that the swap counterparty contacted me and said, "Hey, listen, that swap that we went into, we're no longer, okay from that, and it's costing us too much money. Can we break it?" And I said, "Listen, if the shoe was on the other foot, you guys would never let me out of this contract, and this is exactly what I did to hedge my risk. So no." They never called me again, but now they're paying, probably 8 to 10,000 a month toward my note.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pro Show. I'm your host, Erika, and today I'm thrilled to be joined by Christopher Cooney. He's the CEO of Apoxion Capital Management, and he's going to be here to share his insights on the real estate world. It's awesome to have you on the show, Christopher.
Great. Thanks, Erica. Great to be here.
So let's get started with a bit about you. Tell us more about your journey. How did you find yourself in the real estate world?
Sure. So I was going, as I graduated high school and going into college, I actually, was really trying to figure out what I wanted to do. And I became a lawyer, but I was focused on law and business. And I started seeing a lot in real estate as, my family was buying different businesses and different properties. It really sparked my interest. And I tried to see like the kind of the gamut and range of what was available in real estate, outside of just seeing, what's possible for residential real estate and owning a home. Seeing different commercial properties was really kind of interesting to me, and seeing, what can be done with multifamily, with, larger scale commercial buildings, multi-unit, single tenant, triple net, kind of all across the board. And then when I went into college, I had met a friend, and he was investing actively in Philadelphia with some student housing opportunities. And I said, look, we should partner up on that and try to put some money to work, and kind of off to the races from there.
Was there something in those early experiences that ended up shaping your approach to building Apoxion?
Yeah, it's always been kind of changed. We've always been challenged. And I think every time that you kind of set your sights on something and go for it, it's never a linear path, unfortunately. But I think from all of those challenges that you go through, it really helps to shape and define you. And, you look at these obstacles and learn from them and build from them. And early on, I think that was really very tantamount to my development, because we went into this first couple of acquisitions thinking that, this is going to be a student housing portfolio. We're going to find tenants. It's going to be students. And then as we did that and needed to kind of carry ourselves, we realized that we were actually not renting to students, but we were renting to, low income individuals, and started looking at Section 8, and it was a totally different dynamic than what we were expecting. But for us to kind of, keep the ball rolling and stay solvent and make a return, we had to really quickly adapt ourselves to, a different model. and it worked out.
Yeah, absolutely. And fast forwarding to today now with what's going on, what kind of unique opportunities or challenges do you see in the market right now?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So yeah, the biggest thing I see is there's still so much kind of spilling over from the macroeconomic environment, especially with respect to inflation. I just think that asset values have gone up so much. It's super expensive for people to get started today. The Fed keeping rates high, it's nothing but makes it more challenging for everybody. I don't see it as a positive. I understand that, it was originally to curtail inflation, but at this point, any kind of new investment is just being, completely stifled with issues from a capital use perspective, from growth, among others. What I'm trying to do today is I'm trying to basically figure out ways in which I can minimize headwind risk, which can come from potential collapse in the economy, which is what I'm most scared about. But I think that if there's an issue that comes to housing, I think that if we can get in and get out within a short amount of time, so shorter duration, I think that's really the key to being successful right now. And then when the economy stabilizes and rates come back down, I think then we pivot and we try to do, some more buy and hold from there.
Specific markets are you targeting for these investments, and what about them makes them attractive?
Sure. So right now in New Jersey, where I live, it's on the outskirt of New York. I commute, back and forth to the city pretty frequently. We're seeing a lot of families, younger families, but people that are working in New York that have professional careers. They're affluent. They're doing well. A lot of people, I think, had babies during COVID. A lot of people moved out of the city, and now that they have to return to work 5 days a week, they're trying to figure out where to grow and where they fit. And I think that the idea of living in a 1 to 2 bedroom apartment in Manhattan, which again is super expensive, I think it doesn't make sense to a lot of folks. So they're looking at areas where they, more on the suburban side where they can raise a family. So where I am right now, and that's in Monmouth County, New Jersey, I'm seeing tremendous growth here. I'm still seeing houses sell for 100K over asking, and that's in the, mid million and a half range. And there's bidding wars at those levels, which is pretty amazing. But I think here, there's a lot of resiliency because it's a great place to live. It has close access for people to still be able to go to work. And among other factors about good schools and things like that, I think the demand is super high, and I'm seeing it be a little bit insulated as compared to other places across the United States. Where I think a lot of these other factors, and there's more selling going on, certain parts of South Florida right now. So you're seeing way more come on the market, and those markets are starting to be impacted, a little bit more adversely. They're more of a buyer's market where sellers can't get the prices that they thought that they could. They're getting bid 100 to 200,000 less and need to make a decision if that's the right level to get out. So very different geographically speaking.
Yeah, and the market just changes so much over time. You've been in the industry for over 10 years, so you have a lot of wealth of experience. Christopher, can you share a pivotal moment or deal that really defined your career or solidified your focus?
Sure. Yeah, I think the first one, it was probably 2021, pretty recent. I had went into a deal. It was my first commercial deal. And I've been in fixed income for a while, so I'm really familiar with, when things go right, how they work, and, the idea of having a fixed income come in, and then fixing your liabilities so that you understand how the cash flow is going to work. Well, in this deal, again, we were in a very low interest rate environment because we were talking about, maybe a year into COVID or just before. We started to see some issues from it. And I went into this deal. I bought a property for a little bit more north of 1.6 million. From a financing perspective, I did a 10-year amortizer I'm sorry, a 10-year note. It was a 25-year amortizer. So the payments were nice and stretched out.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And the bank that I dealt with did not want to give fixed rates, so I had to take on a floating rate loan, but they did offer a swap. So I did an interest rate swap, which is it's a pretty simple derivative, but what it says is that you basically set the rate right before you close the transaction, and if you are in the money, meaning that the rate, today's market rate, is higher than the rate that we fixed at, then the swap counterparty has to pay the difference to make sure that I'm always um, taking that fixed rate. And conversely, if the rates went lower than where they were, I would have to pay extra in order to make things equal. So what had happened then is I locked in a fixed rate of 3.88%. And as we all know, the rates went up so much fast, so much and so quickly. And what had kind of happened from there is that the swap counterparty contacted me and said, "Hey, listen, that swap that we went into, we're no longer, okay from that, and it's costing us too much money. Can we break it?" And I said, "Listen, if the shoe was on the other foot, you guys would never let me out of this contract, and this is exactly what I did to hedge my risk. So no." They never called me again, but now they're paying, probably 8 to 10,000 a month toward my note, which is pretty amazing. So it really showed me just, being smart, taking your time, being careful, understanding what risks, are prevalent in the market. And nobody had a crystal ball to realize that rates were going to go up as quickly as they did. However, we knew that we were at a pretty good point where we can say there was a floor. And in buying into that floor, I knew rates were going to go up at some point. So we made a prudent investment decision. I have investors in that deal, and our rent was actually indexed for inflation. The rent went up about 100% over the course of me owning that property as well. So I have a public tenant. It's a triple net property. The rents went up 100%. My liabilities are capped at 3.88%. We're all making a great ton of money on that deal. And now I'm just trying to figure out if when asset values come down or rates come down, if I want to 1031 out of that and buy something else, or kind of if I want to hold that on my books.
Yeah, excellent. For our listeners who are, looking to level up in real estate, what kind of advice would you give for them when it comes to deal selection or risk management, like kind of like what happened with you?
Yep. Sure. I mean, I think, reading is key. I think you have to inform yourself as much as you can, and not every book that you read is going to be relevant at the time. So there's a lot, and same, like I look at a lot of multifamily stuff, which I think is great. I think there are good opportunities in multifamily, and there will be to come again. I think that right now as well, where people, like I mentioned, might not be able to buy their first house because the asset values are so expensive, they may be able to buy an apartment. They may be able to, they might have to rent an apartment for a little bit longer. So there's different areas in which you can invest in multifamily. But you really just have to be as informed as you possibly can across the different areas of real estate, which is, all different types of resi and commercial. And then you have to just look at what's going on in the economy. And no matter what people tell you, if they tell you that, everything is great, you really need to always look at where are the holes, where are we headed, where do you see there being an issue? I think housing is always tantamount, and people always need a place to live. But when you're seeing people have to give something up, what does that mean? Where is it? And I'm in another market in Colorado, and we saw it slow down because of interest rates. We're looking at ultra luxury homes that are 2 million up, and they were great. They were getting sold within a couple of months of being completed. Everything was moving really quickly. And then what happened is with high interest rates, a lot of people said, "Hey, you know what? I don't need the vacation home right now, or I don't need this Airbnb property. I'm going to wait until rates come down." So it's not that we're wrong in the investment; it's just timing. So there's always much to be learned in every situation.
Yeah, absolutely. And speaking of the timing and that, what kind of trends are you noticing in the market right now?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, so right now, I think across the U.S., I think we're seeing asset values start to come down. I think some other markets where there's either been overbuilding or over demand, and I think a lot of, it's true to COVID too, when people were able to move away from their homes and start looking at vacation destinations as the new place to live, with the idea of remote work taking over. Certain places like in Texas and in Florida, we're seeing asset values kind of claw back to like 30% less than what they were at the peak. In other areas, there's definitely more resiliency, like in the primary markets, like in New Jersey, where I mentioned. But secondary and tertiary markets, I think that there's gonna be a kind of a rebound where houses are coming down. It might be 6 months to a year, but I think when rates start to come down, I think those asset values will stabilize, and I think that the demand will come back, and I think that we'll see them approach normal levels. They're probably still going to be, I would say, 15 to 20% less than at the peak for now. But I think that there could be a good buying opportunity in the next couple of months for sure.
Yeah, absolutely. Christopher, I want to pivot a little bit and talk about the relationships that are built in real estate. As I'm sure you know, it's essential. So for you, what's one valuable lesson or connection that you learned from networking that you could pass on to our listeners?
For sure. I think, giving everybody a chance is the right move. You shouldn't, you never know when you need somebody, I guess, in the process. And that's true. So even if you have built a team and let's just say it's with development, you have your subcontractors or you have your GC and you think that you don't need anybody else for a while. You never know what's going to happen. You never know if somebody's going to exit the industry. You never know if the subs are going to move away, and you lose valuable people. So referrals are super important. I think that you need to always find good people, keep good people around you, and then take their advice. In this business too, some of the properties that I own just with a really close friend of mine. We both bring different things to the relationship. I'm a lawyer and I've been in investment banking for a long time. My best friend is an architect and an engineer, and what he brings is a valuable perspective that I don't. I don't see things the same way that he does. And he introduces me to people in the construction world that you never know. They kind of tap on my shoulder and say, hey, you know what? I actually want to buy a vacation rental. Are you guys building anything in this area, or what do you think about it? And we'll build a house and sell a house to somebody, and that I would have never come across had I not maintained that relationship with my buddy.
Yeah, absolutely. Christopher, what is next on the horizon for you and Apoxion? What vision do you have or goal you're looking to scale?
Yeah, thanks. So what I'm really focused on, I want to grow and I want to take on investors. I've done pretty well, but using all of my own money, and I've tapped into family and friends, and fortunate enough to say that I've helped them grow money as well. They're with me and they want to stay invested, but I feel like to really appropriately scale, I have to take in outside capital. So what I want to focus on is, getting the right relationships with people that have a shared vision and understand what I'm investing in and why. We have a 3-year lockup mostly for things in the fund because, the next 6 months could be very choppy and we might not, hit a ton of home runs in the next 6 months, but I can keep us solvent. I can keep making money and bringing a return to my investors. But if I'm right with my philosophy in that as rates come down, these asset values will go up, the demand will resurge. Having the right investors behind me will allow me to really scale the fund. And instead of doing, 3 to 6 houses in a half a year, I can bring that up to 10 to 12, in my local region. And then I think, we'll be in a very different position, and we can look at, other asset classes and other geographies, and, similar stories of scaling and bringing good returns to my investors.
What kind of strategies are you using to attract investors? And also, what is your process like for building trust with those potential partners?
Sure. So, I hate cold solicitations. I think sometimes people get like a list of potential investors or family office investors, and they're sending emails out, and they're throwing the pitch book right in their face, and you don't even know these people. You don't know that the family office even invests in real estate, and if they do invest in real estate, you don't know that they want your deal for wherever you're located. They might have very specific criteria, and they just delete your email. So I'm trying to get a little bit more selective. I'm actually, for the first time, starting social media marketing campaigns. I had spoken to somebody that was raising capital himself. He was more of a bridge lender. So what he would do is he'd raise capital at like 9%, and then he would turn around and find operators that needed hard money loans, and then charge them points, and relend the money out about 12.5%. So he was making a spread from 3 to 3.5% plus the points. And he said that on social media marketing, he was able to raise $140 million from investors that understood his model, his philosophy. They were good with his underwriting. And that really opened my eyes, because for the most part, it had just been exploring my own network and dealing with people from my past life, right? Be going in investment banking. I know people are interested in investing, trying to make them comfortable with real estate. And having an expansive network is really helpful, and looking for referrals, but it doesn't always get you commitments. And even at those times, people could have been doing well, but they don't have the money or the resources, to always get into a deal when you need them to. So social media right now is one. Those family offices and networking, I like to do it a little bit, a little softer than the cold email solicitations, but I'm trying to find events, might be at country clubs or other places where, investors might be present. And there's a lot of good conferences like in Florida and New York. So trying to just go there and just rub elbows with people, and just network and let people know what I'm doing. Getting into different real estate forums, and then even, in construction, surprisingly, I've gone on a number of those conferences as well, and a lot of folks that are owners, from my contact with my partner that I mentioned, we're getting into some different rooms, and these guys are saying, hey, I run a big construction company, we're making a lot of money. They're not really sure outside of construction where to invest it. So I'm trying to see if those guys, if we can get relationships and put deals together for what we're doing, and we're diversifying their portfolio outside of what they've been doing every day.
That's exciting. Well, Christopher, this has been an incredible conversation. For our listeners who want to connect with you or collaborate, what's the best way for them to reach out?
Sure. So please email me at ccooney, CCOONEY, at Apoxion, APOXION, capitalmanagement.com. You can visit us on the web. And, if you ever want to just reach out, if you're in the area, if you want to have a coffee or do something, I'm always open to that, coffee or lunch. Otherwise, I'm happy to answer questions. And, I think a big part of this too is giving back. I'm by no means a guru in this space, but I'm happy to share my experiences and, help folks figure out the right path and track for them. And if they want to invest as well, I mean, that would be amazing. Great.
Yeah, yeah. Well, that was fantastic. Christopher, thank you so much for joining us on the show and sharing your insights.
Great. Thank you so much. It was a pleasure, Erica. Take care.
And for our listeners, if you got value from this episode, make sure that you're subscribed to the Real Estate Pros Show. We've got more conversations coming up with pros like Chris, who are crushing it in the real estate world. We'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.